All right, let's jump right into this. Welcome to today's Explainer, where we're going to unpack a topic that's been making some serious waves and generating a ton of data we need to sift through. Today, we're taking a deep, entirely impartial look at Aptum, and more specifically, its native token, APTM. If you've been hanging around the DeFi space lately, you've probably caught the headlines, read the community letters, and seen those wild chart swings. Our goal today? To slice right through the hype. We're going to objectively demystify the market data using the project's own numbers and their freshly updated tracking metrics. So let's get into it. And we're kicking things off with a number that is just, well, it's incredibly hard to ignore. Plus 634%. No way, right? So here's what happened. Coinmarketcap recently updated its price tracking for APTM. They did a total chart reset. Instead of tracking from just some random arbitrary date, they realigned the data to kick in the exact moment the Apertum DEX actually went live. And following that reset, boom, this massive growth metric of over 600% suddenly became the absolute focal point of the project's recent community updates. Now, the community's official letter pointed this out directly, saying, quote, meaning the market can finally see the real performance from day one. And honestly, that day one baseline, it's a big deal. We're looking at a trajectory that started at an all-time low of roughly $0.0253. That's, barely 2.5 cents, recorded back around February 18th, 2025. By rewinding the chart to that exact moment, the project argues it paints a way clearer, much more accurate picture of their post-launch momentum, rather than just getting bogged down in weird early tracking glitches. Section 1. Deep Dive. What exactly is Apertum? So here's the absolute crucial takeaway. Aptum isn't just another token floating around out there. It's actually a high-performance Layer 1 blockchain. What makes its plumbing so unique is that it's built as a subnet right on the Avalanche network. And that specific design choice, it's all about extreme scalability. We are talking the capacity to handle thousands of transactions per second with sub-second finality, basically instant. It also packs full EVM compatibility, which is a total game changer because developers can just grab their existing dApps and deploy them straight onto Aptum without rewriting the whole codebase from scratch. Plus, get this, it has zero VC or institutional backing, none. Instead, it runs on a community-driven DAO model, so the users are the ones actually steering the ship. Now, another huge piece of the puzzle is how they handle the APTM token supply. Apertum uses a deflationary token model. Basically, this means a set portion of transaction fees is permanently burned. Think of it like this. Every single time the network gets used, the total theoretical supply of APTM shrinks just a tiny bit. Gone forever. Over time, this burn mechanism is designed to continually chip away at the overall supply. It's a massive part of how the network balances its long-term token economics right alongside that high transaction speed we just talked about. And you know what? That speed is already being put to the test. The ecosystem has reported some pretty wild early on-chain milestones. We are seeing hundreds of thousands of active on-chain addresses and well over 1 million transactions logged in its early days. Add to that the constant stream of new smart contracts being deployed thanks to tools like their contracts wizard and growing liquidity on the Apertum DEX since it launched. Now, to be clear, these aren't just empty marketing promises. These are verifiable on-chain numbers that actually back up the community's claims of real ecosystem growth and adoption. Section 2. Grounded reality, the market numbers. Okay, so if we look at the classic life cycle of a new token launch, APTM went through some extreme early volatility. Right out of the gate, the price absolutely spiked, hitting highs above $4. But as is super common in the crypto space, it eventually corrected alongside the broader market. The reality right now, the price has stabilized significantly, trading right around 18.5 cents. This stark contrast, from $4 highs down to an 18-cent baseline, is a really important reminder of how early hype can massively inflate those initial valuations before the market actually figures out the true price. Let's actually break down the raw data as it stands today so we can see exactly where things settle. Like we just said, the current price is hanging near 0.185. That puts Apertum's total market cap at roughly $17 million. Depending on the day's network activity, that 24-hour trading volume can bounce anywhere from 100 grand to over $1 million. But I really want you to focus on those bottom two rows for a second. The circulating supply is sitting at roughly 93 million tokens, but the maximum supply, that is capped at a whopping $2.1 billion. To put that into perspective, just look at that small sliver. That tiny piece of the pie represents the 93 million tokens actually circulating in the market right now. That massive remaining chunk, over 2 billion tokens, is the maximum supply cap that hasn't even entered circulation yet. Now sure, that deflationary burn mechanism we talked about earlier will slowly eat into this over time, But it's absolutely crucial to remember that the supply out there today is literally just a fraction of the total APTM that could eventually exist. Well, the Apertum team seems totally aware of these wild market swings. In their recent updates, they tackled this head-on, stating, quote, "Real projects are not built in days. They are built through technology, infrastructure integrations, and long-term execution." Basically, they're trying to pivot the community's focus away from staring at day-to-day price charts and bring it back to the actual foundation they're building. They want to make it crystal clear. They aren't looking to be a quick flip. They are positioning this as a sustainable, long-term project. Section 3. The Horizon, Building the Future. If we track their journey on a timeline, it shows a really clear progression. The whole foundation was poured back in January 2025 with the launch of the Layer 1 network. Fast forward just a bit, and we got the APTM token and the native DEX debut in February 2025. Then, jumping into recent news from March 2026, they locked down a major partnership with Alchemy Pay. That's huge because it integrates fiat on-ramps, making it way easier for regular people to jump into the ecosystem. And looking down the road to late 2026, their crosshairs are squarely fixed on scaling up that infrastructure and even exploring some integrations with artificial intelligence. More specifically, their current dev focus zeroes in on a few main areas. They are constantly tweaking and improving the stability of their DeFi products. They're also making a really big push to go global. The community notes highlighted some strategic opportunities opening up from events in Monaco and Asia, though just to be totally transparent, based on our sources, the details on those events are still pretty promotional right now, rather than tied to massive concrete outcomes. But overall, the big picture goal is all about driving real-world accessibility and seeing how AI can actually merge with their Layer 1 tech. So, all of this brings us to the ultimate question, the one you've really got to ask yourself after taking all this data in. Is Apertum truly built for the long term? I mean, on one hand, you've got this high-performance EVM-compatible Avalanche subnet doing real on-chain numbers, backed by a clear roadmap and a totally VC-free, community-led DAO. But on the flip side, you've got a token that took a massive plunge from $4 down to 18 cents, and a circulating supply that is basically a drop in the bucket compared to its maximum cap. You really have to weigh that super ambitious tech vision against the very grounding reality of those market numbers. And as we wrap up this explainer, we have to leave you with one absolutely critical reminder. Crypto investments, yes, including layer ones like Apertum, carry extreme risk. As we've clearly seen today, prices can, and absolutely do, swing wildly based on market conditions and early hype. The data is all laid out, and the roadmap is definitely ambitious. But the market is unforgiving. So what do you think? Will Apertum's underlying tech eventually catch up to its early hype, or will it stay weighed down by that massive supply cap? The next move is yours to figure out.